Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. Awesome. So there's quite a number of things that have happened over the week. We only have one more day left in trading before the end of the week. And then we start looking forward to the last week of the first half of the year. So hi, Vandy, and thank you for joining the session. Hi, George. So let's do a quick overview of what happened over the week. And then from there, we'll be able to now start focusing on what to expect tomorrow, as well as next week. So I'll be starting with a very nice article here on Reuters, and then once you go through it, then we identify what to focus on next. So first things first, the Bank of England raised interest rates by a bigger than expected half a percentage point, and this a day, and this was quite a surprise. So the overall concept was that the Bank of England would go for a 25 basis point hike, which would push UK interest rates to 4.75%, but instead they went for a 50 basis point hike, which eventually pushed UK interest rates to 5%. So this was quite unprecedented, and there was a lot of reaction in the markets as a result of the same. So a quick background as to why this happened was the inflation data that came in from the UK, and this was yesterday in the morning. It was quite surprising. So just want to go straight to the economic calendar. We look at the data, and then from there we can focus on the next one. Yes, this was a UK CPI on Wednesday at 9 a.m. So we expected that annual inflation would drop from 8.7% down to 8.4%, but instead there was a big surprise where inflation held at the same level at 8.7%, and the month-over-month change was a gain of 0.6%, meaning that a basket of commodities consumed in the UK just became more pricier by 0.6% between the month of April and May 2023. So core CPI went to an all-time high of 7.1%, and both numbers are the highest since 2008. So it's a real bad indication of the current conditions of the retail market in the UK, including the retail price index as well as the housing price index, which surprised everyone. So while the overall consensus was that the Bank of England would go for a 25 basis point hike, in this case, there was a surprise to go for 5%. And from the vote, we can all see it was unanimous. So besides this, there was also the Swiss National Bank, which raised interest rates by 25 basis points from 0.5% up to 1.75% as expected. Of course, there was mixed reactions in the market. Then we had two speeches, one from Fed Chair Powell, where he was presenting yesterday to the House Financial Services Committee. And he basically mentioned that inflation hasn't quite hit the target of 2%. It's still way higher than expected at 4%. So there's a potential that the Fed could go for 2 more rate hikes, which would push US interest rates to 5.5% and then 5.75%. So that's the overall consensus in the market. So he did another speech today, but now to a different committee. In this case, he was addressing the Senate Banking Committee, and he had the same kind of rhetoric as presented yesterday. So in the presentation, he basically mentioned that they have not yet hit the target, and there's more room for hiking interest rates. So you can see some of the highlights here. The Fed doesn't see rate cuts happening anytime soon. So you're not seeing any rate cuts happening this year. We think we are within a couple of rate hikes of the level we need to be. So a couple of rate hikes basically means more than one. So in this case, the market is pricing in more rate hikes, each weighed at around 25 basis points which would eventually push US interest rates to 5.75%. And that's the upper limit. So besides these, you can see more comments from his speech earlier in the day. So a strong majority of the FOMC members see 2 more rate hikes happening this year. My forecasts are very similar to the committee's forecasts. And last one, just looking for the last comment from the Fed. So unfortunately, that was it. So with this in mind, we know that if the US is looking to further tighten policy, then as a result, we expect overall to see a strong dollar and weaker equities. So while the dollar has been attempting to make a recovery for the last 4 days, it made a sharp drop yesterday, but then today there was quite an impressive recovery, especially after the start of the New York session. That was between when the Bank of England announced an interest rate hike and when the Fed Chair Powell was addressing the Senate Banking Committee. So with this in mind and seeing how strongly the dollar has recovered from yesterday's sell-off, we can also see the same correlation happening here. So while on one side, the pound was pretty strong, gaining against the US dollar, so it managed to hit our target or get very close to 1.8462, which was last week's high. But then since then, you can see the strong rejection and the prices proceeded to move further back downwards. So now in this case, we're expecting that the dollar will continue strengthening against the pound. And in this case, the short-term target in line is 1.26964, which was the low of yesterday. And of course, if you look at the Euro USD, so despite the ECB hiking interest rates and the Euro being relatively stronger than the dollar, we have seen the dollar rebound later this afternoon. And now we are seeing some form of pullback and there's still more room for downside momentum. So this trend line remains pretty standard. So a nice target just around 1.09235 is in order. So this is closer to the breaking point, but also on the trend line. So the could actually drop all the way down to test this area. Of course, the alternative is also true. So if the dollar happens to find weakness as we approach the end of the week, then the euro could retest today's high. So it could also go back to 1.10140. So as for USD CAD, it has been one single consistent theme of the dollar consistently losing against the Canadian dollar. So on one hand, the surprise rate hike by the Bank of Canada was quite adding more fuel. Sorry for that. So we are seeing some further downside momentum. Of course, you have a technical chart pattern that was broken here, and the market was moving down strongly on the daily chart. So besides all this happening, we know that oil prices have been resilient this week. Is that we have seen a very strong correlation between the Canadian dollar and oil prices. So while on one hand, oil prices were strengthening, the Canadian dollar was also strengthening. Now that we are seeing a strong dollar, there is a good chance we'll be seeing some pullback happening here. It doesn't seem that strong. However, the overall prevailing trend remains the same. So in this case, I would be more observant of some further downside momentum. So if I was to zoom out here and then I look at the chart pattern here, then it would make more sense to observe this line here. So just a moment as I plot this one. So we have a pretty nice trend line appearing on this area here. So I just want to make sure it's accurate enough for everyone to see. So this is what we are focusing on our USD CAD. So it's a pretty straight form line, more clear on the 1 hour chart. And now we are seeing the US dollar being pretty resilient. So if the USD was to retest this area, which is a resistance level here, and which is also close to the trend line, then that means that it would be the area we would be looking for a short selling position. So anything around this area would mean that we start looking for a short selling position based on the performance of the markets here. And of course, there's opportunity of a break. So if a break happens towards the upside, then we also consider a bullish position around this area. So anywhere above 1.31787 would make more sense. So as for USDN, we're seeing some form of bullish momentum. Basically, the market looking to complete the entire cycle. So the entire cycle has had a high of around 151.98, which was the highest price as at October last year. And now we are seeing monetary policy dictating a very strong interest rate hiking cycle from the Fed, whereas over the entire period, the Bank of Japan has not raised interest rates. So as a result of this divergence, the overall result is one currency being extremely strong against the other. So we have already seen comments coming from the Ministry of Finance in Japan, basically implying that they are getting more pressure on their currency. And what they're doing is basically threatening to intervene in the markets. So with this kind of threats happening, we'll be seeing the Japanese yen start to reclaim some ground. But if there is no actual intervention in the market, then it basically means that the prevailing trend continues. So what this implies is that if you are a bull in this market, you continue buying the USD against the Japanese yen, but also be very careful because the Bank of Japan doesn't always announce its interventions. So if it's looking to intervene in the currency market, it will not be notifying you. So if you have a buy position and they intervene, then you could make significant losses. So you have to practice proper risk management at all times. So in this case, we are seeing some pretty good momentum. So in this case, we had this pullback here, which looks like a cup and a handle. The market broke to the upper side and seems to be moving even higher. So there is a good chance, especially following the Fed chair comments, that the USD JPY currency pair will continue to rally higher. So as for gold, this is the first time we are breaking out of this sideways range. So it's more or less like a bearish channel because it has a slight inclination towards the lower side. So in this case, we were expecting that gold prices would make an impressive run from here. So we had a very short run towards the upper side yesterday. So today we assumed we would see some form of volatility indicating momentum to the upper side. But after Jerome Powell's speech, we can all see it was a big drop downwards. So we go to the previous area here, which was acting as the support yesterday. Now we have already broken that area. So there's a good chance we will be seeing gold continue to move down lower. And of course, the immediate target now remains the 1900 price point. So if you're on the short side of gold, then 1900 seems like a psychological area to use as a target from the current price level of 1913. So if you have any questions arising from the presentation, feel free to type them in the live comment section and I'll be responding to them right away. So a very good question for here. Why is the UK pound weak and they raised rates, pound USD? It doesn't automatically mean that the pound is weak just because the pound USD is not making a rally higher. So also there's a question, what about GBP USD? So I'll be responding to that right away. So when you see the pound USD moving downwards strongly, it doesn't mean that the pound is ultimately weak in the global markets. So here we are only comparing two currencies. If you compare the Bank of England to the Fed, you notice that the Fed has been more aggressive in hiking interest rates. So in the last reading, they chose to hold rates level at between 5%. And for the Bank of England, they are playing catch up. So they just hiked by 50 basis points and they just reached 5%. So this means that the US is more aggressive in hiking interest rates, which makes their currency attractive than the UK pound. So while on one side, we have seen the market pricing in this rate hike, where the pound has been extremely strong in the last couple of weeks against the dollar, you might want to think of this as a buy the rumor, sell the news kind of situation. So on the other hand, you can also see that the pound has been quite strong against other currencies. All right, apologies for that. So let's continue. So if you compare and you look at the pound trading against the Swiss franc, you would notice that immediately after the announcement of the news, it has been largely bullish momentum, even though there have been quite a couple of swings that are indicative of some form of whipsawing. A whipsaw is where the market basically makes a very quick momentum in both directions. So a very quick movement upwards, movement downwards, and eventually gets back to the same point. However, overall, since the open of the day, it seems like a net positive for the pound against the Swiss franc. So in this case, even if the SNB, the Swiss National Bank, went for a 20 basis point hike, the pound went for a 50 basis point hike, and it seems like the pound is the one taking the day. So when you're trading such news, it makes more sense to compare the currency with a much weaker currency. In that case, you get an easier directional movement. An example, if you're trading the pound against the yen, then you can see it's a clear directional movement where the market went straight for our target, which was around 182.099. So further upside is expected in this pair, that is the pound gaining against the Japanese yen. So it makes more sense to target trading a strong currency against a weaker one rather than trading two currencies that seem to be pretty strong at the same time. In that case, the amount of volatility you may experience may not be the same. So hopefully, I've been able to answer your question. What's your view on gold? So I've been quite bullish on gold, and I think I've already analyzed the gold chart. So with my business, we have seen some bearish momentum happening. So I just want to track that chart again, just a moment. So for gold, this is what we have been seeing. On the forward chart, we've been having this momentum, the market just oscillating between these two trend lines, which to me seems more or less like sideways momentum. So from the looks of it, we can say somewhere between mid-May and today, the overall price action has been slightly bearish, but more or less of a sideways momentum. So we can't say there was a very clear directional momentum in gold. So the only time we have seen a clear directional momentum in gold was during the break early in the day. So the break happened here, and from since then, we have been seeing some further downside momentum happening in gold. So following the comments from the Fed Chair Powell to the Senate Banking Committee, he basically clarified that there is still more room to keep hiking interest rates a couple of times before the end of the year, which would help to get inflation to the target of 2%. And as a result of this, the markets are already pricing in another couple of rate hikes, which basically means a stronger dollar against other currencies. So in this case, it's also a stronger dollar against gold. So in this case, I expect some further downside momentum. And as you can see, it has been consistently moving back downwards. So maybe at 1900 is in line right now. So as for US equity indices, beginning with the NASDAQ, there was an impressive comeback here, especially after Jay Powell's speech. But still, overall for the week, we have seen the last 4 days being completely bearish. Actually, the last 5 days. So from Friday last week, Monday, Tuesday, Wednesday, and today, Thursday, it was completely bearish momentum. So today, we have had quite a big spike. But then the fact that Jerome Powell is looking to continue hiking interest rates basically means that we don't have to think about market bottom right now. So we might want to have prices moving back downwards for a while. So in this case, I expect the prices to keep moving downwards. So despite the short-term rally that we have had for the day, I expect some further downside to be happening in the NASDAQ. So for US 500 is the same, an attempt to go up, which is being met strongly with some good resistance. So apologies for that. I lost my connection for a second, but now I'm back. So I was almost completing the session. So I'll be looking to make my final remarks before we get to the last day of the week for trading. So having seen all this happening for the week, tomorrow we'll be looking at one key data point. It comes from a report that is released every month by the S&P Global. So the report basically measures what we call flash manufacturing, as well as services purchasing managers index. So what this report does, they will do a survey in a majority of the world economies. And on these surveys, they will look at what we call, we basically describe them as procurement departments in Kenya. But then if you go to other countries, they describe them as purchasing managers departments. So from this survey, they will look at the orders that have been placed in the manufacturing sector, in the services sector, and they will use that as a leading indicator of oncoming business, both in the manufacturing sector as well as in the services sector. So with this in mind, we will be expecting to see more activity, especially for the economies that have shown some form of resilience. So the focus for tomorrow will be on the US. So I'll be sharing this right away. So early in the morning, we'll start with Australia, flash manufacturing PMI, as well as services. So if the number is below 50.0, it basically implies contraction. If it's above 50.0, it indicates expansion. So when you're judging this number, the first factor is to weigh whether the sector for that economy is under contraction or expansion. And of course, you look at the change from the previous month to the current month, and of course, the change from the expected number to the actual number that is reported. So besides this, we'll be looking at the same data for Japan. Manufacturing has been doing quite well for Japan. So we'll be looking at the same. There will be retail sales data from the UK, as well as a speech from ECB President Christine Lagarde at 9:45 a.m. tomorrow. Then European flash manufacturing PMI and services. These will be released at exactly 11 a.m. So first we'll see the leading indicators, which is the leading economies in Europe, from France as well as Germany, before we see the overall number for the Eurozone. So far, the manufacturing PMI has been contracting, whereas services has been expanding. It's the same case for the UK. Services has been expanding, while manufacturing has been slowing down. And of course, same story for the US. On one side, services have been expanding, whereas manufacturing has been weakening. So in this case, we will be looking at all the data, and hopefully the reports will be very explosive, creating the necessary volatility for us to trade in these markets. So thank you very much, guys, and I hope to see you on the next session. Remember, tomorrow we have another session that is the market snapshots at exactly 11 a.m. And they will be presented by the one and only Samson Zera. So make sure to turn up. And of course, for myself, I'll be doing one more session on Monday at 11 a.m. about the market snapshots, basically looking at what we're expecting for the week. And of course, looking at the key price levels to trade on Monday.